Okay, so let's be real for a second. The cost of education these days, it's kind of terrifying.
Yeah, it can be a lot.
It's like a huge weight, especially for a lot of you listening, I'm sure. And figuring out how to manage that financial burden, that's a whole other challenge.
Right.
But what if I told you there are ways to maybe lighten that load a bit, like actual strategies to get some of that money back?
Okay.
That's exactly what we're diving into today. We're talking education tax credits.
Yes, and these are not some like hidden secret. They're legit credits that can directly reduce your tax bill, like dollar for dollar. So it's not just deducting from your income, it's actually cutting what you owe, which is a much bigger deal.
Way better.
Way better, yeah.
So for this deep dive, we're going to break it all down for you. We're going to lay out the two big education tax credits, who can actually use them, how they work, and exactly how to claim them.
Sounds good.
So think of this as your cheat sheet for navigating this whole thing.
I like it.
So the two main players here are the American Opportunity Tax Credit, or AOTC, and the Lifetime Learning Credit, aka the LLC.
Right, and each one has its own quirks and perks.
Exact.
So understanding the difference is key.
So let's start with the AOTC. This is the one that gets a lot of buzz, right? It's supposedly the more generous of the two, but it also comes with some strings attached.
Yeah, that's fair to say. The AOTC is really geared towards those first few years of college. You know, those initial 4 years of post-secondary education.
Okay, so we're talking about the traditional bachelor's degree path, right?
Yeah, exactly.
So for someone who fits that bill, what kind of a financial break are we talking about here? What's the potential impact of this credit?
So with the AOTC, you can get a credit of up to $2,500 per student each year. And here's how it breaks down.
Okay.
It's calculated in two parts. The first $2,000 in qualified expenses, you get 100% of that back as a credit.
Okay.
And then for the next $2,000, you get 25% of that back.
So to max it out, you'd need to spend at least $4,000, right?
Exactly. So if you're hitting that $4,000 mark or more, you're looking at that full $2,500 credit.
And one of the big things I've heard about the AOTC is that it's actually refundable, right?
Yes, that's huge. So up to $1,000 of that $2,500, you can actually get back as a refund even if you didn't owe any taxes to begin with.
Wow. So even if your tax bill is zero.
Even if it's zero.
Okay.
You could still get a check for $1,000. That's a big deal, especially for those who maybe don't have a huge income.
Especially when you're a student, right? Like that could be a game changer.
Absolutely. It can really make a difference.
So walk me through a scenario where that refundable piece comes into play. Like how does that actually work?
Okay, so let's say we've got our friend Maggie, right?
Mm-hmm.
She's working part-time while going to school, maybe making about $28,000 a year. And her tuition bill comes in at $5,000.
Okay, so far so good.
Now, before any credits or anything, let's say her federal income tax bill is $4,316. Now, because her tuition was $5,000, she qualifies for that full AOTC of $2,500. Remember, it's that $2,000 plus 25% of the next $2,000.
What?
Now, this is where the refundable part kicks in. So up to $1,000 of that credit, she gets back no matter what. And then the remaining $1,500 goes towards wiping out her existing tax bill. So essentially, her $1,316 tax bill disappears, and on top of that, she gets a $1,000 refund.
So just to be super clear, she gets a check for $1,000 in her pocket, right? Even though she already owed $1,316.
Exactly, because of that refundable piece of the AOTC.
That's pretty incredible.
It can be a huge help.
So that's the AOTC. Now let's talk about its counterpart, the Lifetime Learning Credit, or LLC. This one, you mentioned, is less generous in terms of the dollar amount, but it casts a wider net in terms of who can use it.
Right. The LLC, it lives up to its name. It's for any year of post-secondary education, not just those first four. So we're talking graduate school, professional degrees, even just individual courses to boost your job skills. So it's not just for undergrads.
Okay, so this could be for someone going back to school later in life, or someone who just wants to sharpen their skills for work.
Exactly. If you're looking to level up your career or maybe go for a master's or a PhD, the LLC might be the better fit.
So what kind of credit are we looking at with the LLC?
The LLC maxes out at $2,000 per tax return. Now, that's per tax return, not per student, which is a key difference from the AOTC. So even if you have multiple kids in college, the total LLC credit is still capped at $2,000.
Okay, so a family with 2 kids in grad school, they're still only looking at a max of $2,000 total.
Exactly. It's per return, not per student.
And how do you actually calculate that $2,000? What's the formula there?
So the LLC gives you 20% of the first $10,000 you spend on eligible education expenses. So basically, $10,000 times zero point 0.2 equals that $2,000 max credit.
Okay, pretty straightforward math there. Now, we talked about the AOTC being refundable. What about the LLC?
This is a big difference. The LLC is non-refundable, so it can knock your tax bill down to zero, but you don't get any of it back as a refund.
Okay, so if you owe $1,500 in taxes and qualify for the full $2,000 LLC.
Your tax bill goes to zero, but you don't get that extra $500 back.
Got it. So it's really only helpful if you actually owe taxes.
Right. Unlike the AOTC, where Maggie got that extra $1,000 even though her tax bill was already covered, with the LLC, you can't go below zero.
So it's all about reducing what you owe but not getting an extra payout.
Exactly.
Okay, so we've got the rundown of each credit individually. Now let's talk about who can actually use these things. What are the big eligibility factors that apply to both the AOTC and the LLC?
Right. So first off, for both credits, the student has to be enrolled at an eligible educational institution.
Okay, so we're talking about your typical accredited colleges, universities, that sort of thing.
Yeah, pretty much. Anything that qualifies for federal student aid, like vocational schools, too.
Yeah,
Your standard accredited places.
got it. Now, are there any specific enrollment quirks for each credit?
There are some. For the AOTC, you got to be enrolled at least half-time for at least one academic period that starts during the tax year. So like a semester or a quarter.
Okay.
With the LLC, it's a bit looser. You just need to be taking at least one course during the tax year.
Okay, so even a single summer class could count.
Exactly. And another interesting thing about the AOTC, if your expenses are a bit low one year, you don't have to claim the credit that year. You can kind of save it for a year when your expenses are higher.
So it's not like you're losing out on the credit if you don't max it out every year.
Right. You have some flexibility there.
That's good to know. Now, what about the actual stuff you're spending money on? What counts as qualified education expenses for these credits?
So for both credits, we're talking tuition, fees, and required course materials.
Okay, standard stuff.
But there are some nuances. With the AOTC, it's a bit broader. It covers books, supplies, even if you didn't buy them from the school itself.
Oh, interesting. So if you find a textbook cheaper online, that could still count.
Exactly. And get this, it can even include things like sports, games, hobbies, but only if they're part of your degree program. Like if you're studying physical education and need to buy, I don't know, a tennis racket or something.
So it's not just strictly academics, it's anything directly related to the program. Okay, what about for the LLC? Any differences there with books and supplies?
Yeah, with the LLC, books and supplies only count if the school requires you to buy them directly from them. Like if it's part of your tuition bill or something.
Okay, stricter there.
A little stricter. But on the flip side, the LLC is more flexible with the type of education.
Yep.
It's not just degree programs, it's also individual courses, even non-credit courses, as long as they're for job skills.
So like a professional development workshop could qualify.
Exactly. If it's directly related to your job or career advancement.
That's great for folks who are focused on career growth, maybe not pursuing a full degree.
Definitely.
Now, are there any expenses that are definitely off limits for both credits? Things that don't count no matter what?
Oh, yeah, for sure. Insurance, medical expenses,
Yeah.
room and board, transportation, those are all separate. And things like childcare, even if it's so you can go to school, those don't count either.
Makes sense. They're kind of treating those as separate life expenses.
Exactly. It's all about what's directly related to the education itself.
Right. Now, we touched on this earlier, but let's talk a bit more about how financial aid, like Pell Grants, interacts with these credits.
Right. This is where it gets a bit tricky. So if you've got a Pell Grant or a scholarship and you use it for tuition, you can't also claim that same tuition amount for the AOTC or LLC.
Okay, so no double dipping.
No double dipping. But here's where it gets interesting. Because the AOTC is partially refundable, sometimes it's actually better to use your Pell Grant for living expenses. That way the grant becomes taxable income, but you might be able to claim a bigger AOTC because you paid more tuition out of pocket. It's all about maximizing the benefit.
It's like a puzzle almost. You have to figure out what gives you the biggest overall advantage.
Exactly. It might be worth running the numbers both ways to see what works out better.
For sure. And on a side note, it's great that they've expanded the Pell Grant program to include more incarcerated individuals. More access to education is always a good thing.
I agree. It's a positive step.
Definitely. Now let's talk income limits. These credits aren't for everyone, right?
Right. There are income limits, and they can change each year. So always check the latest guidelines.
Okay, good advice.
But for 2024, if you're single and making between $80,000 and $90,000, or married filing jointly and making between $160,000 and $180,000, the credit gets smaller. And if you're above those amounts, $90,000 for single filers, $180,000 for married filing jointly, then you can't use either credit.
So there's a phase-out range and then a hard cutoff.
Exactly.
Now, what about the person actually claiming the credit? Any specific requirements for them?
Yeah, a few things. You have to be either the student themselves, if they're not claimed as a dependent on someone else's return, or the person claiming the student is a dependent. You also need a Social Security number, an ITN or an ATN, and that has to be issued by April 15th of the following year. For the AOTC, it's got to be by April 15th, 2025. You also can't claim these credits if you're married filing separately.
Okay, a lot of details there.
Yeah, a few things to keep in mind. And generally, non-resident aliens can't use these credits. But there are exceptions if you're married to a U.S. citizen or a dual-status alien who chooses to be treated as a resident for the entire tax year.
Okay, a lot of ifs, ands, or buts there.
A few, yeah. It's best to check the specific rules if you're in one of those situations.
Definitely. Now, you mentioned earlier the no double benefits rule. What exactly does that mean?
This one's pretty straightforward. You can't claim both the AOTC and the LLC for the same student in the same year. You pick one. And you also can't claim one of these credits if you're also taking the tuition and fees deduction for the same student. You got to choose the best option for your situation.
No double dipping, basically.
Exactly. The IRS wants to make sure you're not getting multiple breaks for the same expenses.
Fair enough. Now, are there any extra hoops to jump through specifically for the AOTC, given that it's more generous?
Yeah, a few more things. The student can't have already claimed any education credits for more than 4 years. They also can't have already finished 4 years of higher ed before 2024. And they can't have a felony drug conviction. You'll also need the school's EIN for the AOTC.
Okay, so a bit more stringent there.
A little bit.
Mm.
Which makes sense, given that it's potentially bigger benefit.
For sure. So now we know what these credits are, who can use them, all that. But let's get practical. How do you actually claim these things when tax time rolls around?
Okay, first things first, gather your paperwork. The big one is Form 1098-T, the tuition statement. Your school should send this to you by January 31st. It lists all your qualified expenses. And it's also smart to keep your own records, like receipts for textbooks, especially if you're going for the AOTC.
So stay organized throughout the year, basically.
Absolutely. Keep those files in order.
Good advice. Now what? What do you do once you have all your ducks in a row?
All right, so the next step is to really dig into those eligibility rules we talked about. Make sure you actually qualify. We covered a lot, but the ultimate guide is IRS Publication 970 called Tax Benefits for Education. It's the Bible for all the details.
So Publication 970, got it.
Yeah, that's your go-to resource.
What happens once you've confirmed you're good to go?
Okay, so once you know you qualify, you'll need to fill out Form 8863, which is called Education Credits. This is where you crunch the numbers and actually claim the credit. Luckily, most tax software can walk you through it, so it's not as scary as it sounds.
So tax software is your friend here.
Definitely. And then you just file your taxes, make sure that Form 8863 is included, and you're good to go.
And if you're claiming the AOTC, that refundable portion will be part of your refund, right?
Exactly. It all comes back to you in one lump sum.
So we've covered a lot of ground here. But before we wrap up, any final tips or things to keep in mind?
A few things. Timing is key. The tax year is the calendar year, so only expenses paid within that year count. Keep good records for at least 3 years after you file, just in case. And if things get complicated or you're not sure about anything, talk to a tax professional. They can give you personalized advice. And of course, there's always Publication 970 and the IRS Tax Benefits for Education Information Center online.
Excellent advice. So to recap, these education tax credits, the AOTC and the LLC, they can be real lifesavers. They can help offset those crazy education costs.
Absolutely. By understanding the differences and the eligibility rules, you can really maximize those benefits and keep more of your money.
So listeners, do your homework, see if you qualify. You might be surprised at what you can get back.
And here's a final thought to chew on. We talked about the AOTC being refundable and the LLC not being refundable. We talked about all the specific expenses and the income limits. So think about this. How could you strategize your educational expenses, maybe even the way you use financial aid, to really get the most out of these credits? It's all about planning for the long haul.
It's like playing chess with your finances.
It kind of is, yeah. But it's a game worth playing, especially when it comes to education. It's an investment in your future.
Absolutely. All right, that's it for our deep dive on education tax credits. Hopefully you're feeling a little less overwhelmed and a lot more empowered.
And hopefully a bit richer, too.
Exactly. So until next time, keep learning, keep exploring, and keep those tax benefits in mind.
And keep those receipts.
Always keep those receipts.